Hi, Alan here, and I want to greet you from Dworshak State Park. In fact, at the end of this video, I'll be glad to kind of pan around and show you the view from my home on the road. I've been here for a few weeks, and I'll be here for several more. It's really kind of a special place. Listen, I want to talk with you today about a chart that when I saw it, frankly, it took my breath away, and it concerns me. Forgive me as I refer to my notes because I'm a teacher and I want to make sure I cover all points. You know, when you look at this chart, and you might want to scroll down to take a look at it and then come back up to me when you're done studying the chart, but look at it with me. Since the creation of the Federal Reserve just before 1920, you can see that the money supply in this country, the amount of money floating around, was less than $100 billion up until about 1971. There was a gradual increase, but it was under control. In 1971, you may recall that Richard Nixon took us off the gold standard. He did that because we were in debt thanks to the Vietnam War, and he had to do something in order to print more money. And you can see the printing of more money beginning in 1971. And you immediately had people raising the warning bell because we were the world's reserve currency. We were the ones in the Bretton Woods conference in the mid-1940s, I think it was 44, that said to the world, you can use our currency and trade back and forth like we're the monopoly banker, and we're not going to devalue our currency in any way. Well, we have, and you can see that on the chart. If you look at the next 20 years, from about 71 to about 91, there was a gradual increase from 100 to 300 billion, and you had voices out there in the woods saying, this is not good, we shouldn't be doing this, we should get it under control. Well, instead of getting it under control, by the time that Clinton took office, and this continued into the Bush years, so it really is not a political thing, you got both parties irresponsibly handling the situation, we rose up to about $800 billion until the current administration took over. Look at that. Right about 2008, we were at money supply of $800 billion, which is 8 times greater than the historical values during most of the 20th century, but since 2008, just since 2008, and I'm recording this, of course, in 2014. This is, I think, June 12th. So, you know, that's the current news. I mean, this isn't going to change. We've gone from $800 billion to $3,200 billion in circulation today. Now, I'm not an economist, and I know that some of this money is being held by the banks and handled in such a way by the Federal Reserve that it doesn't completely run rampant, but it just doesn't sound right to me. It doesn't sound good. It doesn't seem like anything good is going to come from this. And again, I'm not an economist, but I have a background in science. I have a background in analytical thinking, and looking at this, it just doesn't seem real good. This has created cheap money, as I've read in many reports, and it has effectively devalued the dollar. Now, apparently, from my understanding, this has created a lot more havoc overseas than it has here so far. The Arab Spring, for example, the riots in Egypt, I understand, were largely, despite whatever you hear in the mainstream press, over food. The fact that people couldn't afford to buy their weekly food supply, and they went to the streets, they took to the streets, and they said, this is not acceptable. This is also creating problems throughout the world in terms of the view of us, Americans, because we are acting to drive inflation across the global scene. Well, here, locally, have you noticed the price of fuel? You know, I know that there are reports out there showing that at the end of Bush's administration, the average price of gasoline, regular gasoline, was $1.85. What is it now? It's close to double that. In addition, what about food? Food has been going up and up and up and up. I've seen reports of 20-25% inflation just in the first half of this year for food. And that affects you and I because that's cutting into any kind of disposable income that we have. The interesting thing is that I believe, again, I'm not an economist, but when you look at the official inflation reports, they don't include food and fuel. I think their argument is that they're too variable or too unstable, so they look at other things. I don't know what they look at. I've heard another measure is the Big Mac index, and if you look at what a Big Mac costs today and compare it to costs over the previous several years, that's not looking real pretty either. So what does this mean for us? Well, according to the article, and I'm going to link you the article below the video so that you can see this, they're expecting a strong possibility of hyperinflation. If you want to know what hyperinflation is, do a little bit of research on the Weimar, that's with a W, Republic, and that was the infamous German government that existed post-World War I, prior to the rise of the Nazi Party. And during the 1920s, they printed a lot of money, and we have iconic photos now of people carrying a wheelbarrow full of their money, called Deutschmarks, into the market to buy a loaf of bread. The hyperinflation was so bad that prices were doubling every 3.5 days. Just picture that in your mind. Pick your favorite food, and whatever day you're watching this video, now add 3.5 days and the price doubled. Now add another 3.5 days and it has doubled from there. And if you graph that, by the way, that's an exponential growth curve. So that's kind of what this graph looks like that we have here. And this graph, to my understanding, is fact. It's not an opinion, it's fact. This is what has happened with the monetary supply. So could it lead to hyperinflation? It could. There are economists, and again, I'm not an economist, that say, no, this won't happen. And in fact, there might even be deflation before any kind of serious inflation or hyperinflation. But in the bottom line, to me, it doesn't look good. What about food? Well, if you have rapidly rising prices, fuel prices, food prices, could that disrupt the chain of delivery? Trucks, in other words. Could truckers get to a point where they can't even afford the fuel for their vehicle? And I claim the answer to that is yeah, possibly. And for that reason, I'm recommending people have food on hand, have a food reserve. I have a link below where you'll be able to access information on a company that I recommend, that I've personally invested in having food on demand, so that if the supply lines for any reason were cut off, you would have food. The average American, I think, has about a day's worth of food in their pantry, and that's not going to be real good. Remember the old Twilight Zone, where the fellow was preparing with a bomb shelter, and there actually was what they thought was going to be a bomb, and you saw how people responded when that occurred. Yeah, that's science fiction, but you know what? There's a lot of things that science fiction writers envision that have happened and could happen. So a word to the wise. What about the impact upon gold and silver? You know, gold and silver right now are fairly low. Silver at the time that I'm recording this is just over $19 per ounce, and gold is somewhere just under $1,300. And the fact is that sales are at very, very high levels, from my understanding, from all the reading I'm doing. And a lot of that is overseas. So where the Eastern world is seeing it, the Western world apparently is not seeing this yet. And the scary thing is what happens when the Western world wakes up? What happens if we go from 0.5% or 1% ownership of gold and silver in this country to 5%? That's going to be millions of people waking up and saying, you know what, I got to get my hands on some silver and gold. And you can do the research yourself. You can find out that silver is an incredibly, incredibly rare metal now, especially given the fact that it's under extremely high demand for industrial use. There's silver in every single iPhone out there. There's silver in every single Droid. There's silver in a lot of the electronics we use, and it's the preferred metal. The only alternative that's viable is gold, and of course gold is not used because at the moment gold is 40 or 50 times more pricey than silver is. Well, silver may very well, under the laws of supply and demand, at some point have to respond to that. Again, I have somebody that I go to at Monex, and I'd be glad to refer them to you, or refer you to them, so that if you want to make a purchase of silver or gold, you can go ahead and do that and know that you're in the hands of a very good company, and at the lowest commissions possible and at the best price possible. You can do your own open research on that. This is not some kind of home-based business deal with gold. I would encourage you to stay away from any of those. There's right gold to buy and right silver to buy, and there's gold and silver that I wouldn't touch. And if you want to know what my thoughts are on that, give me a call. In fact, I'll give you my number, 561-676-1205. And that's in the Pacific time zone, so don't be thrown by the fact that it's a Florida number. One more time, 561-676-1205. And I'm in Pacific time. Give me a call according to reasonable hours. You East Coasters, no calls at 8 o'clock your time because that's 5 a.m. my time. All right, please. Um, and I'll be glad to speak with you about who I use and about what I do there and about anything else I'm talking about in here. Um, my thoughts on this. I think that when people realize that money, that the US dollar is at risk and that the US dollar has truly been debased. I mean, imagine if you held stock in a company and you had one share out of 1,000, and all of a sudden the company said, well, we're going to go to 4,000 shares. But we're not increasing our value significantly or at all. We're just going to have 4,000 shares. What does that do to the value of your one share? Think about that in terms of what it does to our dollar when the United States government over the last 6 years has quadrupled the money supply. To me, that just doesn't sound like that's going to have a pretty ending. What I'm doing is I'm working to supplement my income. And after bouncing around through a whole bunch of different programs, there is one that I highly recommend. And I'll be very upfront. If you go to alansills.com and you simply look at the link called Promptings way up top, or scroll down my list of recent posts, assuming you're seeing this within a month or two of June 2014, you're going to see a post talking about send out cards. And there's more and more coming out about this company that I really like. It's really different from any other home-based business, and it's something that I'd recommend you want to take a look at. So I'm supplementing my income, and of course, I'm not going to keep that money as dollars. I'm going to convert that money either into my expenses, or I'm going to convert it into gold and silver and then bury it so that I know where it is and nobody else does. Um, what will this do to stocks? It's interesting that as I speak, now the stock market's been down this June 12th. The stock market's been down a couple of days in a row. Is this the beginning of the big break, the big crack in the outlook for the market? I don't know. I can't tell you that. I know there are a lot of people out there saying that the market is going to crash. I don't know that that's going to happen. I mean, if you look at it this way, as the dollar becomes worth less and less, then the dollars that go into stocks are worth less and less, and it's possible the price could keep going up. So the Dow could go from 17,000, which is what it is just under right now, to God knows what. On the other hand, investors could look at this, and investors have a kind of a nervous trigger finger. If it does drop precipitously, or if there is a world event, which is the wild card that nobody knows about and nobody can predict, then it's possible people are going to pull their money out in droves, and you're going to see a crash in the market. I don't know. I honestly can't say that. I can tell you that if you looked at my portfolio, my decisions over the last couple of years have been based on the fact that I expect a severe drop, and that hasn't happened. So you can imagine the condition of my portfolio at the moment. Should that severe drop happen today, tomorrow, next month, a year from now, that may change the outlook of my portfolio, but that's not your concern. That's my concern to lose sleep over. Anyway, I just wanted to share this. I'm going to pan around now. I promised you I would pan around. Alan Sills here, Dworshak State Park, north central Idaho. It's an absolutely beautiful place. I encourage you, if you're on the road, if you're an RVer and you see this, stop by. I warn you, the road coming in here is kind of gnarly, but it is an absolutely beautiful, beautiful park. And the more people that I interact with here and online that know about the park, I'm convinced I think I found a gem. Anyway, let me scroll around, let you see this place, let you hear the sounds of nature, and thank you. All right, you take care. Have a great day. And hey, thanks for listening. Take care.